Good evening, everyone. Welcome back to the channel. So, wow, the market has been bloody red as we get into the second half of December, and this year, 2022, is almost over, which it's been a very interesting year. And like I say, blood red for the market. So much for a December rally. But what I want to talk about this evening, I've never actually done a Disney video on this channel, and I've had a lot of requests for it. So I'm going to give my take on what's going on with Disney. We may or may not get a little controversial in this one. I'll give some of my opinions and, my opinions on the company, the pricing, the stock price, and whatnot. Full disclosure, I've been an investor in Disney since like 2014. I bought the stock. Oddly enough, the stock's almost at the price I bought it for back in 2014. But let's go ahead and dive in and I'll show you. We'll do some stock analysis here on Disney. It had another big drop today, which is why it's been in the news a lot today. Because the latest release of the newest Avatar movie, which took like 12 years to make a sequel, apparently it's flopped domestically, so the stock was down almost 5%. So it's at 85.78 a share, which is oddly enough very close to the price I paid back in early 2014 for it. I bought it around here. I think I paid like 81 or 82 for it. So it had a nice run up until the beginning of last year. It was up to $184 a share. But you'll notice, according to Yahoo Finance, the 1 year target estimate for the Walt Disney Company, ticker symbol BIS, is $126 a share approximately. So the price could be undervalued, but you can see the price to earnings ratio is really high, even with the stock getting hammered at 49.30. That's still a very high price to earnings ratio. You can see earnings per share. Next earnings date is February 7th, which is actually my birthday. So that's interesting. They missed earnings pretty bad the last quarter, and as I just said, the next earnings date is February 7th. So they've beat earnings 2 out of the last 4 quarters. And so if we look at the 5 year view, the stock was doing fairly well. It kept running up, and then and it fell. It fell to like 96.60, which was a great buying point because it turned out the stock doubled by the next February. But then it's just been a straight roller coaster ride down since then. So hasn't been too good. Now, my theory on Disney, when Disney acquired Lucasfilm, when they bought Star Wars or the rights to it, I thought the company was going to take off because me being a big Star Wars fan, Star Wars or Lucasfilm was never a publicly traded company. So I was super excited to see what would happen with Star Wars being part of a publicly traded company. And it did well for a while. Going back to like 2015, there was a nice run up like in April of that year, going all the way to when the first Star Wars movie came out. And I mean, it had a nice run, it really did, but it's fallen precipitously down from where it peaked out, unfortunately. Now, a couple things I want to go into what's been going on the business side. So Disney has parks, they have their movies, their Walt Disney Studios. They have several different lines of business. And let me see if I can kind of discuss that in form of a company profile, because that would kind of be easier. I mean, I can tell you off the top of my head, but obviously they have parks around the world. And the thing with a multi-line of business conglomerate like Disney, it's very hard for all of the lines of business to balance out. The parks could be doing great, the movies could be struggling, or vice versa. The studios could be doing really well, the parks could be struggling. Now, me being a Star Wars fan, I think overall they did a great job with like the Galaxy's Edge that they have um, at Disneyland and at Disney World in Florida. I think they did a great job on all of that. I think they've done a lot of good things. I mean, I think that Disney Plus has been good overall. I think it was actually uh, far superior in content to a lot of the peer group, and that's because Disney owns so much stuff. I mean, they own Star Wars, all the Marvel movies. Their closest competition in terms of like action, famous movies like that, I guess would be Universal. But all of the companies, like all the streaming companies, are getting their own service going. HBO is also really good. So there's a lot of competitors in the space. But what I want to go into, there's a saying, "Go woke, go broke." I don't know. We might avoid that in this video. I just thought I'd throw that out there. So recently, there was a change at the helm of the company. So Bob Chapek, who was the CEO of the company, uh, he had to step down because there was a lot of complaints about the way he was running things. And Bob Iger, who had been the CEO of the company from like 2005 to just before the pandemic started, he actually got out like February 2020. And I remember thinking back then, I'm like, wow, good move. Like he got out on top basically because he saw what was coming. But then he stayed on like as like I guess he stayed in a similar capacity to help guide Chapek, who I believe was his handpicked successor. But then there was such like dissension within the board about what all Chapek was doing that they begged Iger to come back. And now hopefully Iger can help turn things around because a lot of people believe that Disney has lost its way in recent years. And Disney, they've infamously had their famous feud with the Florida governor, Ron DeSantis, over special tax treatment that they get. They actually, in the state of Florida, they have a special tax free district called Reedy Creek. And the former CEO, as I understand it, never tried to negotiate with DeSantis. He just kind of let it go. But now I think Iger is actually negotiating. And he's going to do, because several people have asked me, well, what's Iger going to do to turn the company around? Well, first, I think that he's going to kind of cut back on some of the things that Chapek was doing in terms of like price gouging at the parks and things like that, because there was a lot of irate folks over that. Apologies, I had a little bit of a runny nose. I got a little bit of a cold over the weekend, but Iger is going to possibly get rid of some of the stupid stuff that Chapek did. Like in the parks, they have this lightning lane. They have basically they charge for everything now. They used to have, as for pass holders, they used to have fast passes. You get 3 fast passes per day, and if you use them, you could get more. But now you've either got to wait in the lines or you've got to you got to spend extra money to get a fast pass. So it's like what used to be free now is charged. So Chapek was looked at as an infamous price gouger. Excuse me. So hopefully they will kind of go back on that because there's a big common belief that Disney's kind of lost its way, and Disney's always been expensive, but it just the thing is like they get crowds like regardless. Like they could double all their fees and they'll still be crowded. But the next thing I want to show here, the costs for like the parks line of business since 1970. They call it the happiest place on earth, but it's also the costliest place on earth by this chart. So if you look, when Disney World in Florida opened up in like 1971, the first park opened in like 1971. There's 4 parks, whereas in California there's 2. So ticket prices have risen more than 3,000% over Walt Disney World's history. And Disney has, for the most part, a loyal core fan base that will pay whatever just to go to Disney. So back in 1971, when the park first opened, it was $3.50 for admission for adults and $1 for children, and those prices are unimaginable today because, like this article says, it's gone up, and you can see here, like it's the roller coaster chart here. This was as of 2019, $159 for price of admission, and it's even more at the California park. So nothing like an energy drink in a Pilsner mug. You should seriously try it out. Good stuff. So yeah, you can see that. I actually had another chart, but I couldn't find it, so I just pulled this one up from Market Watch. And yeah, so you can see that like a 3,000% increase. Whereas here's some peer products, like the cost of a Coke has gone up from here to here. Look at the theme park pricing, parking 50 cents back in the day. That's actually in 1970, that was a lot relative to if it was $3 for admission, 50 cents was like a sixth of the price. And then a hotel room, this is one of my favorites. So like a nice hotel room on the premises back in the 70s cost this. Today it costs this. You would be lucky to get in one of those for like under $1,000. And then some of the restaurants in the parks is what they used to cost then and what they cost today. And a lot of this was pre-pandemic, so it's even higher now. This thing's kind of freezing up on me here. It must have a cold too. These MacBooks, how to save money on a Disney World vacation. That's impossible. Um, anyway, I have another article here I wanted to toss around. Well, I pulled this one up about Bob Iger. Can he turn Disney around? This is from this website called The Day. It was greeted by glee by Wall Street and Hollywood's creative community. So actually, there was a lot of buzz around the company when Iger first came back. I believe he came back about a month ago, mid-November, and the stock actually soared that day when he came back. So let's see here. Oh, no live viewers. I didn't think there would be. I'm not talking about dividends. But guess what? Speaking of dividends, Disney pays a dividend. I forgot to mention. Oh, actually, you know what? They stopped paying a dividend like a year and a half ago. They used to pay a dividend, like 5 or 6 of the years that I was a shareholder. I still am, but they actually cut out their dividend, and that may have led to some of the money flowing out. I believe as of last year, they cut the dividend. So let's look here, and we'll see. We will see here. I think it was like a year and a half ago. And that could have, a lot of times when companies get rid of their dividend, it leads to a flow out. Actually, wow, they haven't paid a dividend since before the pandemic, December 2019. They used to pay, I believe it was biannually, it was 88 cents a share. It was July and December. But yeah, those days are over. So, wow, I didn't realize it had been that long. But anyway, market cap of the company, 156 billion. Yeah, so no dividend. I can't talk about a dividend, so that means most people probably won't watch this because my audience is mostly dividends. But I've been wanting to do a Disney video for a while, so let's see. Okay, we don't want to talk about that. Yeah, like I said, they've kind of lost their way, and I think that I was thinking that the stock could because it's close to what I paid for it back in the day, which kind of makes me wish I would have sold out of it because now I'm almost back at a zero gain. Yeah, my gain has basically been wiped out. It would have been nice to sell it like last February when it peaked out. But the PE ratio, like I was almost going to call this a good buy, but well, and then I almost, like I said, I should have said goodbye to it by selling it. But would you say goodbye to this, or would you say it's a good buy, as in a good buying opportunity? The PE ratio suggests not. And I say that because if you look at some of the peer stocks like Meta's actually got one of the lowest PE ratios that there is, at least comparatively speaking, 11.13. That's like a fifth, almost a fifth of Disney's PE. So that's why a lot of people say that Meta could be one of the most undervalued stocks. But you can see the 1-year target estimate. Of course, that's just what the analysts come up with. So you can never really hang your hat on that, or at all if you're not wearing the hat. Haha. But anyway, that's my analysis and my 2 cents on Disney. If you stay in the stock much longer, you could be left with only 2 cents, or not. I think Disney's gonna turn things around. Really, Disney's one of those staple American companies. I think they'll turn things around, and I think they'll be around for a while. And I'm not going to sell my shares at this point. Their loyal fan base will keep them in business. Oh, the other thing I wanted to say, talking about Chapek. So Chapek, he was actually one of the interesting things he was doing. Going back to this article here, he was actually, for any of you that have Disney Plus, they have the good shows like The Mandalorian, and Boba Fett, Star Wars stuff, Kenobi, Andor. They've got a lot of good shows and stuff. But what he wanted to do, he wanted to raise the price from 7.99 to 10.99 for like he wanted to create like an ad free plan, and then a plan with just that had ads that would stay at the same price. And he was basically saying that, they're priced basically half of what Netflix's premium service is priced at. So, he was suggesting that there was room for a price increase, but the board wasn't going along with that. But the other thing he was doing, he was actually hiding losses for Disney Plus, because what he was doing, he was shows that were created exclusively for Disney Plus, and I bet this article will get into this. Uh, he was actually having them air on the Disney Channel so that they could be chalked up to other divisions within the company and not counted as a loss for Disney Plus, because he wanted to make Disney Plus look better. Unfortunately, when you add all that up together, the results of Disney Plus made it more like Disney minus. I know the puns just keep coming in. But anyway, that's about all I have for Disney at this point. If I find that other chart, I'll do another video on it. Hopefully, again, like I say, with myself being a shareholder, hopefully they can turn things around. I think that would be a good thing. Like I say, Disney's a staple American company, so hopefully they can turn things around. If all of you liked that, hope you enjoyed it. If you did, please remember to like, comment, and subscribe. And thanks so much for tuning in, and take care, and keep an eye out for my next videos.